So this has been a crazy, crazy week. Here to help us hash it all out, we've got Kingsview Wealth Management CIO Scott Martin. Scott, you know, first, I got to just ask you, the last 2 weeks in general, this market, you know, everyone that came on was cautious. They were out in the market. They were in defensive plays. I mean, have you been caught somewhat by surprise at the resolve of this market the last couple of weeks?
Yes, I have. Charles, it's one of those things, though, where you get surprised, you get caught off guard, but you also have to think back in recent history as to this is what happens. When data gets really bad, when the economic climate gets a little bit murky, and when there's geopolitical issues all around, and everything looks really terrible, and everybody's telling you get out of the market's going down, rebalance, reallocate, that's actually the time you should be reallocating, but to more growth, more aggressiveness. And so while I am a little surprised at the resolve, I'm not surprised in the sense that we've seen this movie before.
Right.
And we're seeing it play out right now.
Let's talk about some of the niches that have come on. Chips yesterday, NVIDIA was up 10%. You know, are you buying chip stocks at this point?
Well, I wouldn't chase them on a week like this week. Now, we own NVIDIA in a lot of our ETFs that we run through Monarch funds, as well as through a lot of the accounts that we run for our clients. So we already have NVIDIA, which has been good. I would look at some other chips, though, Charles, maybe as seeing it spread over to maybe the AMDs of the world or the Texas Instruments. But I wouldn't chase them on a week like this week because there's a lot of froth in those names now, at least in the reaction to NVIDIA so far. So watch them come in a little bit, maybe 5% down from these levels, and I'd be a buyer.
What about oil stocks, fossil fertilizer stocks? A lot of these names getting an extra bump from what's happening over with the war on Ukraine.
Yeah, they've been good, and they've been good diversifiers. I think that's the biggest news about oil this year is that it's been a great, even though it's equity, you know, if you look at Chevron, Exxon, and some of the others, it's like that's been a good diversifier away from traditional equity because those have been up while a lot of stuff's been down. So we have some energy stocks in our portfolios here at Kingsview. I would tell you this, Charles, right now, I like the pipelines. So if you look at stuff like AMLP, a higher dividend, close to 7-8%, and that's the mover and the shaker of the oil and the crude that we need to start going in this country as we try to develop, I think, some sort of energy policy, maybe.
What about cannabis names? You know, we all know cannabis is hot, then they fell off. They're on fire this week, no pun intended. A lot of rumbling about legalization or not decriminalization, if you will. You know, they've come down a lot. Would you be a buyer here?
They've been crushed. And it's tough with cannabis because they kind of were that forgotten asset class, like you mentioned, Charles, in the last 6 months. I mean, dare I say, a lot of those stocks went up in smoke, and that is a pun intended. So with respect to where cannabis valuations are, I think they're attractive. But to your point, it's largely politically driven right now. And if you get bad news in political land from the cannabis area, that's not good. If you get good news, it's obviously good. But no telling how that's going to pan out short or long term, really.
You know, Scott, I was reading a headline today in Ukraine, you know, there's a counteroffensive. They're going on the offensive. They've held their ground. The war is a month old. Russia's not winning. In fact, many think they're losing. And it feels like there could be a correlation to, you know, we're rooting for Ukraine, and every time we see something positive there, maybe the market going up. I'm not sure, but if the tide turns and it looks like Russia's on the verge of some sort of decisive victory or their atrocities start to increase, would that start to hurt this market, in your opinion?
It might. Charles, as you know, the market usually preempts that good news or bad news in some cases, so it may be too late when we finally get that news, whether, like you said, it's good or bad. But look, any kind of resolution, any kind of positivity out of that area of the world is good. Longer term. Now, short term, there may be a little bit of gamesmanship here to play on that, but longer term, look out 6, 12 months, that's going to be a largely positive development for the S&P 500 and, frankly, probably for fixed income as well.
And, of course, for the world and humanity. Scott, thank you so much. We covered a lot. Folks, we'll be right back.